Well, a positive start to the week on the local share market. Earlier I spoke to Charlie Aitken from Bell Potter. Charlie Aitken, Wall Street at 10-week highs and rising hopes, of course, of a European solution. I guess the local market couldn't fail to fire today.
Well, the V-shaped recovery is absolutely on, Tiki. I think I spoke to you 2 weeks ago. The market's now 420 points above there. Today, again, sellers exhausted. Everyone who doesn't want to be in the share market is in cash, and the market's finding it very easy to go up. There is a European solution coming, and equities remain very cheap, and I think this rally is going to continue.
If the European solution fails to satisfy, though, is the market going to be a bit wobbly, do you think?
I don't think it can fail to satisfy. Everything that gets leaked to the press, and Tim Geithner, the US Treasury Secretary, speaking over the weekend, they are going to use the bazooka. You know, Greece is going to default, 50% haircuts, $200 billion bailout of European banks, $2 trillion European TARP. It is not going to disappoint, Tiki. The market's going to like it, and risk money is going to come into risk assets. All
right, well, moving
There's
to
a prediction.
Stocks, and the Australian Securities and Investment Commission has confirmed that Chi-X has met its licence conditions ahead of the opening of a rival stock exchange. What are the feelings, though, down at market level about the startup?
Don't start me on this one. It's like we need another stock exchange. I mean, people hate shares enough. The volatility, the wild ride. You know, look, do we really need another stock exchange to help high-frequency traders transact who just scalp the Australian market? I've obviously got a pretty strong view on this. I mean, obviously, you know, we will use Chi-X because we have to, but I just don't see the need for it, and I don't think it helps in any way reduce volatility in Australia or in any way help real users of the equity market. So there's my view.
Thank you for that one. Woolworths says that it's considering and toying with the idea of raising hybrid securities in the event that it needs new capital. What do you make of that?
Very big growing trend here, Tiki, where Australian household names are issuing hybrid equity in Australia. Look, the mums and dads of Australia like guaranteed yield. A lot of these preference shares and hybrids pay about 8% per annum. You don't have to put up with equity market volatility or Chi-X or any of that. You know, you can just invest in Woolworths and get an 8% coupon. Look, I think this is going to be a growing trend where Australian corporates move away from bank debt, and you're going to see more of it. So while Woolworths said they haven't really decided on this, I think if they decided to, there'd be very good appetite for it.
And I see Ansell shares have done very little despite its AGM being told of good momentum and emerging acquisition opportunities.
Yes, the Ansell AGM was upbeat, but you've got to put into context, Tiki, these shares have done very well relatively and absolutely in the market rout of the last 2 months because they are a relatively defensive company. I think, look, the AGM was absolutely fine and the shares are good, but the market's just looking for riskier, cheaper stocks at the moment. You can see the stocks that led the rally today were all resource stocks, China-facing, and everything that had been beaten up in the last 2 or 3 weeks.
Charlie Aitken, thank you very much for joining us.
Thanks, Tiki.